Greetings, members one and all of the Salivation Nation. Could gold and silver spot prices become less relevant and reliable? That is the opinion of some out there. We've seen it as of late. Let's explore. Yes, we're looking at precious metal prices right now. Looks like gold is taking a little bit of a hit. Silver, an even bigger hit. In fact, silver went down well below $15 earlier in the day, as some had noted to me earlier. Let's take a look and see what silver prices did. They dipped down pretty far down into the mid 14 level several occasions here. But this is something that we're seeing. Very strange, especially with now we have 30 million people unemployed, and the stock market is a little bit nervous about that. GDP growth down tremendously, but yet gold and silver prices are taking a little bit of a hit. But what does this necessarily mean in terms of what you pay for gold and silver? And what do these prices mean when they're being reported differently on different bullion dealer websites? And also the gold futures markets are still different. And there's a wide gap between those. So how relevant are they and how reliable are they? Well, Media Man shared with me an article after I'd posted news about Scotiabank's metal business closure and how it could impact daily gold price discovery, according to analysts here. So we're going to take a look at this here. Very interesting indeed. Turbulent times. First trying to sell, then downsizing its bullion desk. Canadian Bank of Nova Scotia, Scotiabank, now appears to be closing its metals business, according to Reuters. Reports came to light on Tuesday that Reuters, citing two sources familiar with the matter, that Scotia had a global call with all its metal staff, which I think was about 15, according to the last report here, and said it was shutting down its metals business, one source said. The plan is to unwind the metals business, said another one. The goal was to reportedly wind down all existing metals business by the beginning of 2021, the sources added. The move could mean more challenges for the gold market that has already seen a supply crunch and wide price spreads between spot and futures prices, analysts told Kitco News. The Scotiabank shuttering of its metals business is a sign of these historic times of market upheaval. However, such is not a shock to all the metals marketplace that has in recent weeks already seen many companies and mines so severely impacted by the COVID-19 pandemic, said Kitco's senior technical analyst Jim Wyckoff. From my perspective, the COMEX futures market has at least temporarily overshadowed the spot or cash gold markets in terms of accurate daily price discovery, given the significant slowing of spot business and spot market making. Thus, the gold market from a price perspective will take this news in stride, Wyckoff noted. One fear is that spot prices could become less reliable, which could be a big hit for the gold market that has already been struggling with a wide spread between spot and futures prices due to all the logistical issues connected with the COVID-19 shutdowns. It definitely will have an effect on price discovery. The less big banks that are participating in the metals markets, the less reliable those prices coming out of London will be, which we've already seen has been a problem in the past couple of weeks. Gainesville Coin's precious metals expert Everett Millman told Kitco News on Tuesday. The problem could be made worse if more banks like this close their bullion business, Millman added. A lot of people are worried that Scotiabank is just going to be the first of many banks right now to kind of exit the metals business. We have to see if there's a domino effect that exacerbates the problem, he said. I'll stop there because I kind of don't think that's going to be the case. Scotiabank has had some issues and problems. In fact, Silver Turtle 65 even noted that they've had some issues in Central America And there's been problems going on, especially with accusations of manipulation and the like. Not proven thus yet, but still a little concerned. And they only had 15 people working for them during this here in the past year or so. But it goes on to say that another area of concern is some disruption on the client interface side, said Kitco Metals Global Trading Director Peter Hugg. I would imagine Scotia has financial project leasing agreements, metals accounts for their clients, as well as inventory financing deals with dealers. Scotia, I assume, will attempt to sell these deals or handle them to maturity. Clients may need new credit facilities with other bullion banks or mines that have financing in place, may be a bit nervous and are likely already looking for new options, Hugg said. The news of Scotiabank winding down its bullion desk might also add pressure to the supply side, said Sprott CEO Peter Grosskopf. We are already having a tough time getting the amount of physical that we require. I think it's going to be that much harder, said Grosskopf. It's almost the opposite of what's happening in the oil market right now. Other analysts said they believe that the nature of the physical market is not going to change. And I'm of that mind too. There may be some change, but not a whole lot. Others will fill in the gap because it doesn't sound like Scotiabank had that much going into it anyway, with only 15 working for them. But, I don't know. Because, confidence certainly could be affected by this, overall by the markets. And of course, with this COVID-19 situation, with every passing day, that things are closed down, and it makes it that much harder to start. Could we go to a point of no return? Potentially, if things continue the way they are. And that might be why people are nervous over this. RBC Wealth Management Managing Director George Giro said that the spot price was never really reliable because it's not liquid and it's full cash. It is full cash. There is no margin. Lately, I've seen a number of banks move their trading departments or close their trading departments. A lot of it has to do with other things like Brexit. The problem of the traders all having to work remote from home, Giro added. The character of investments has also been changing, he noted. The problem with the trading of the gold is that it's just changed a lot. But it will not affect anything because you have more central bank businesses, and traditionally, the central bank business is in the spot market. Back in 2017, Scotiabank tried to sell Scotia Makata, the world's oldest gold trader owned by Scotiabank, and I covered that story then. Unable to finalize the sale, however, Scotiabank ended up keeping its precious metals trading business, but downsizing it at the beginning of 2018. Only around 15 people, as we mentioned before, currently work at Scotia's metals business. 75% of the employees are on the precious metals side, and the rest are on the industrial metals side. Just 5 years ago, the unit had about 140 employees with offices around the world. Scotia Makata's history goes all the way back to the late 1600s when Moses Makata partnered with the East India Company to ship gold to India. The operations were set up in London in 1684. In 1997, Scotiabank acquired Makata Bullion by purchasing it from Standard Chartered. So, again, with this thing being downsized, it's only a transition that may not have that much effect. But I think there's a greater story here, and that is the fact that, with the spot price being so kind of out of whack and not consistent, and even among different, trading sites out there showing the prices and not updating the same way, I believe there needs to be a standard. One place that some people should go, one place that everyone goes and has an app that will report the spot price in real time on everyone's site. But I guess that's just a dream for most of us, because bullion dealers are being accused of padding the numbers so they can get a little bit more spread on their purchases or what have you. And then other places are being, that are reporting these prices that have glitches, and when things don't report the right way or something goes down because of of a glitch, something there's be some reliability out there, so the people can be able to have the confidence that they're purchasing or selling based off of real numbers that are in the system. So we'll see how this all plays out. Regardless, that spread between the futures and spot price is something noteworthy for sure. But really, as I said in a prior video, and I'll link to it at the end of this video, there's only one price that matters, and it's the price of the transaction, whether you buy or sell. That is the price that matters. So there you have it. A very interesting article indeed. Certainly does make us think about spot price and the prices that we used and we talk about on this and other channels and analysts around the world. Now, the question is where do we go from here? And what do we trust? And what is a true price discovery for gold and silver? I want to thank Medio Man for sending this article along to me, making me aware of it. And I want to extend a multitude of gratitude to you all for taking the time to watch, and remind you that I do post videos on a daily basis, and encourage you to please rate, share, comment, and subscribe.